get into it. I'm not gonna take too much time on this one, but when it comes to trading on different time frames and being able to cycle through time frames and know what to look for, what I like to do is basically, mostly I mark up my charts on the 1 hour or higher. Most of the times I'm marking it up on the 1 hour, and then recently, especially with the NASDAQ and US 30, I've been looking more of like 4 hour, sometimes daily. But that 1 hour time frame is definitely going to give you a lot of clarity when it comes to finding those day trades and then getting into the trade itself that same day to be able to hold for those swings that I look for. So with this being said, the 1 hour time frame, let's say we have price selling. We want price to sell under this level. What we want to do, the only time you really need to actually look for those correlations in different time frames is on the correction and the continuation. The correction and continuation should be the only time you should scale down. So let's say if we're looking at our charts, we just woke up, we're getting ready to get on the charts. The first thing we're going to do is go to the 1 hour time frame to mark out our levels. Our levels are very, very, very important. If we mark out our levels first, this gives a good idea of where all the buying and selling pressure is. So once you find out what the buying and selling pressure is or where it's at, then this helps you bring clarity and it helps you understand what you need to look for at these certain levels. So with that being said, if we're looking at the 1 hour level and we already have clarity that buyers are sitting at this level until price breaks here. So once price breaks here, this lets us know that there's no more buyers here, right? So if this is the case, we want to find that correction. So we want that correction to come and then the continuation to start. But when that continuation is starting to start, we're going to take this 1 hour time frame and we're going to scale down to that 15-minute time frame, right? So since we're going to scale down to that 15-minute time frame, what we're going to see right here, so once you're going to see this right here, you're going to see, I'm going to just do 1 hour time frame. And then we start to see price progress back up. And we'll be looking on the 15-minute time frame at this point, right? And you'll see price start to progress back up. And then what you want to see on the 15-minute or even the 5-minute is price fail to go higher. Once it fails to go higher, you want to start seeing it break those support levels that it had. And by this time, you should already see price well below this price level. So we're just going to draw it in the same area. You're going to start seeing price go well below that level, that level that you're looking to sell price under. And the reason why you can now take a sell is because everything correlates with each other. So this 1 hour caused the indication. It caused the new low, right? This 1 hour caused a new low, right? So since we caused the new low, this is our new low too as well. So I'm going to go ahead and drag this across. This is our new low as well, but this is our 15-minute time frame. So let's say 15-minute TF. You can even say 5-minute TF, whichever one you can see it clearly on, right? Whichever one you can see your swings clearly on is the one that you can use, right? So with this being said, we see that price ends up failing to make a high. So this is our highest point, and then we see price make a lower high and then a lower high again, and then we have this support right here too that it broke. So not only is price building lower highs, but it's breaking supports on the 15-minute time frame, and now it's breaking below the 1 hour time frame. So that gives us enough confluence to enter a sell trade. It gives us enough confluence to enter a sell trade when price starts breaking that level, and then we can put our stop loss here, and then we can target, we can target all the way down here, right? So that's what we're looking for when it comes to trading this way. We're just waiting for that correction to happen, looking at it on the 15-minute time frame, scaling in. Well, you're already on the 15-minute time frame, but when you scale in, you want to find that same bearish structure that you had before. So you're basically looking for ICC, but on a 15-minute time frame. And if, once again, if you don't know what ICC is, go back and watch all the other videos. ICC is basically the indication, the correction, and continuation. No, it's not break and retest or supply and demand. No, I'm not trying to make it seem like this is something brand new. This is not brand new. I've just broken it down because I've been trading for 4 years, and I've found it best for me to make a 3-step process, or even 4 steps or 5 steps. But I found the less steps that I have, the easier it is for me to get into a trade and be able to profit off that trade. So once again, I'm not saying I'm a freaking philosopher. Oops, excuse me. I'm not saying I'm a philosopher. I'm just telling you this is the best way that I see trading. And it's a simple way for me to be able to get in and understand the markets. So if you want to trade the same way, you can. But if you don't want to trade this way, or if you think it's too simple, or you think it's a joke, or this and that, then you can just leave. But yeah, so this is the way that I take my entries. All I'm doing is scaling down, seeing if I can find some kind of, extra confluence of price doing the same thing that I'm looking for. So if I'm looking for sales, I need to see all the time frames line up with each other. So if I'm seeing sales on the 1 hour, so that means that new low. This new low also means like wherever this new low was coming from, so that indication part, this is where your sell entry should be. So if price is still correcting up, let it correct up. And as it's correcting up, just monitor it on the 15-minute time frame. So I'm gonna show you a prime example. It's gonna be an example of how I use time frames to my advantage and how you can basically, overall help you with your entries and basically knowing where you need to be in the markets. So first, we're gonna start by looking at the fact that price made this indication right here. So price is on an indication right now. We can see on the 1 hour time frame that it is breaking above a swing high. So overall, these are my swing highs. Let's go ahead and make this blue to, all right, so we have our swing highs right here. And since we have our swing highs here, we know that there are sellers pushing the market down at this level. So since we know that above this level, this is telling us buyers are taking control anywhere above this level until it finds a level of sellers. Now, how do we know when the level of sellers are here, right? How do we know when that is here? So once we start seeing that price is making some rejections, what we're gonna do is we're gonna now say, hey, let me jump on to that 15-minute time frame. So when price is making a new high, so as price is going up and you see that it's a new high, so you see it's breaking swing highs, then you need to go ahead and just scale into that 15-minute time frame so you can already see when the correction is happening, because the correction could happen pretty fast, it can happen pretty slow, but you always want to keep note. So what you want to do is keep marking your highs. Every time you see price keep making a little bit of highs throughout the session, keep marking them. So this one only kind of did it once, and then it kind of just went up the whole session. So then we can see that price gets to this level and then it starts making a fall. It ends up holding, so it ends up stalling for a little bit, and then we can see price makes a support but ends up breaking it again. So this is letting us know that price is still on a downtrend on a 15-minute time frame, right? So remember also as well, we're looking for buys. So all we're doing is waiting for the structure to change back bullish, right? So here we have a lower high. So that means as long as price is still under here, price is still considered bearish, right? So continue, and then we can see that price still makes more lower highs, another level of support that ends up being broken. So price is still on a downtrend. And as we continue, we can see that price once again still breaking support, not going over the lower highs. So we still have this. So once again, we still have more supports being broken. Price is still going down. So let's wait until, okay, boom. Now we have price make this low. We can see here that price pushed up. So from this low, buyers kicked in a little bit, tried to push price up, and it failed to do so. So this is another lower high, right? So since we have this lower high here, we can even scale down to that 5-minute time frame if need be. So since we have this lower high here, and you can even see here, since we have this, I don't know what that was. Well, since we have this lower high here, I'm gonna go back to the 15, but since we have the lower high here, we now can see that price has this support. Same on that 5-minute time frame, we can see that price was holding this support. We're above the, so remember, once again, we're above that level where bullish potential push price up anyways. So now we're just looking for price to change trends. So remember, if price is breaking above a lower high, this is letting us know that there are no sellers to keep the market down. So remember, this is our lower high. This is our lower high. This is our lower high, lower high. Notice how when price buys up, it hits that lower high, sells. Hits that lower high, sells. Hits that lower high, sells. This whole time price was fighting between buyers and sellers. Sellers kept control. Boom, sells. And then price makes a lower high, sells. Now price buys up above the lower high, So now we're going to think in the mindset of, okay, price is now back above this lower high. This lets me know that price is becoming bullish. We can see rejections to the downside too as well. So now I feel comfortable with being able to take a trade because we are above that 1 hour resistance level, and then we are seeing that on this 15-minute time frame the trend is starting to change back. And even then we can say target here and then overall scale out to that 1 hour time frame and then target this overall, because this is where everything started in the first place. This is our new high. This was our swing high. Price went on a correction. So if we go to the 4 hour time frame, we can see that this was a whole indication for the 4 hour time frame. So this was a whole trend for the 4 hour time frame, and then we had a correction, and then we scaled from the so let's say we scaled from the 4 hour, seen this indication, then we see that price ended up correcting. Once it corrected, we then scaled down to a 1 hour time frame. So now we keep it in our heads, oh, the 4 hour is bullish because it has a new high. So all we're doing now is waiting for the 1 hour to go back bullish, which then it did. So then the 1 hour went back bullish because we can see price sold off here, made a support, right? So one made a support. And this is for the 4 hour, right? 4 hour makes a new high, sells off. We're looking at the 1 hour. We see that the 1 hour made a support, tried to come up, made a resistance. Sellers are sitting at this level. So now since we know sellers are sitting at this level, we know that this is the level that price needs to break above. It ends up selling, new low, comes back up to this resistance. Sellers kick in. Sellers try to kick in, but it's out of session, right? Notice how at the end of this session, price starts to buy up super strong at the end of the session. That's what price did this time. Price ended up finishing off what it started from yesterday, right? So all this right here is fake news. It's just fake volume. You want to normally trade around two hours most. If you want to trade out of session, try to trade around like 6. If you're trading NASDAQ, maybe 6, 7, but you really just want to be careful and trade that 9:30, 8 o'clock. Those are the times you really just kind of want to be in the markets. But overall, just stay away from trading the fake volume. So with this being said, we can see that price finishes off and becomes bullish. So now the 1 hour is aligning with the 4 hour. So the 4 hour is bullish. It ended up correcting. Now the 1 hour is back bullish. All we do is scale down to a 15-minute time frame, even a 5-minute time frame, and wait for the 15-minute time frame to align with the same bullish pattern. So remember, that 4 hour was correcting. What did we do? We scaled to the 1 hour, and we waited for the 1 hour to go bullish. Now we're on the 1 hour. The 1 hour goes bullish, so our indication starts here and ends up correcting here. What do we do now? Since it's correcting, what do? We scale to the 15-minute time frame. So same thing. 4 hour made a new high and it started correcting. So we went to the 1 hour time frame. 1 hour time frame made a new high. So now we scale to the 15-minute time frame and we look for that entry. 15-minute time frame goes bullish. So then we know it's above that it's above that 1 hour time frame. And if you want to be safe, you can also use that 4 hour time frame. So above this level, you can even place a position here too as well, because it's above that 4 hour level. First, look for this target because that is where the initial indication started. But overall, you want to target that 4 hour high. So go back up and target that 4 hour high, because whenever you're buying price, you always want to take your buys to the sellers. Like I said in my live the other day, normally whenever you're trading, let me see, make sure I'm good. All right. So normally when you're trading, you want to think about it like this. You're not, so if you have an iPhone, right? So if you have an iPhone and you're trying to sell it, let's say you have an iPhone 16. You don't want to sell your iPhone 16 to somebody who already has an iPhone 16. You're going to sell it to somebody that doesn't have an iPhone 16 because they're looking to buy it. So same thing with your trades. You're not going to take your buys to somebody who already has buys. You're going to take your buys to sellers. And if you're a seller, you're going to take your sells to a buyer because they're looking to buy your sells. So just, go rewatch my YouTube live that I did the other day if it doesn't make sense, because I went more in depth. So this is our setup, and this is how we correlated all the time frames together and used it to our advantage to be able to place these trades. And then overall, we're going to look for that volume to kick in. So once again, that volume, as you can see, New York session came in and everything is following with the volume. And then long term, we're going to look for price to get to that level. Oops. Yeah, it can just play through. It's okay if it plays through. But yeah, so overall, we're just looking for price to target these highs, and we're looking for that move itself. And as we can see, we get there. All right. So with that being said, that is basically how time frames work. So if you guys have any questions, let me know. But that is how time frames work and how you're able to basically, scale from one time frame to make it correlate with the other time frame. So if you're starting with the 1 hour, or if you're starting with the 4 hour and you're marking up, you need to make sure that the 1 hour is aligned with the 4 hour, and the 1 hour or the 15 minute is aligned with the 1 hour. So just take your step down. So the 4 hour, 1 hour shall align with the 4 hour, 15 minutes shall align with the 4 hour and 1 hour, 5 minutes shall align with the 15 and 1 hour as well. So everything should align just the way I explained it.